I'm Mark for USBAFlex. I want to share some valuable information with you about adding more dollars to your pocket each paycheck with our flexible spending account and the Access Plus debit card. A flexible spending account or arrangement, FSA, is an IRS program which allows participants to pay for qualified medical and dependent care expenses with pre-tax dollars. This reduces your taxable income, which will then increase your take-home pay. I thought that would catch your attention. You might be thinking, I don't get sick or go to the doctor or pharmacy for medications that often. Most of us spend hundreds of dollars each year on various medical expenses and prescriptions, or over-the-counter medications. A wide variety of these medications are eligible. In addition to co-pays and deductibles, a medical FSA covers out-of-pocket dental care and vision care expenses, such as eyeglasses, LASIK eye surgery, and contact solution. Most over-the-counter medications are eligible, but must be accompanied by a prescription. To be sure your over-the-counter items are eligible, you can contact USBAFlex at any time. How will a flexible spending arrangement save you money? Let's take a look at this chart showing an example of an employee with a $3,000 gross monthly income. Without a flexible spending account, the taxable income is the entire $3,000. The total taxes for federal, state, Social Security, and Medicare would come to $532. Monthly dependent care and medical deductions totaling $400 are taken out after taxes, leaving a take-home pay of $2,068. With a flexible spending arrangement, this employee has estimated $400 in eligible expenses. These expenses are taken out before taxes, which lowers the taxable income to $2,600. It also lowers the federal, state, and FICA taxes that are taken out of the monthly earned income. Thus, by taking advantage of flexible spending, this employee was able to increase their spendable income by $108 every month. That adds up to an annual savings of nearly $1,250. You see, there are known medical expenses by the employee, and the money would have been spent either way. But with an FSA, they were able to actually save money on their medical and dependent care expenses. With USBAFlex, we make it easy. The more you plan, the more you save. Let me explain the process of a flexible spending arrangement. During your employer's open enrollment, you estimate your expenses you'll spend in the coming year and make an annual election amount. Uniform deductions are made from each paycheck before taxes throughout the planned year are deposited to your USBAFlex FSA. When you incur expenses, simply swipe your Access Plus debit card or file a reimbursement claim with USBAFlex, and we'll reimburse you directly from your FSA. Here's an example. If you estimate you'll spend over $1,200 per year in medical expenses and you get paid twice a month, you'll withhold $50 out of each pay period. But you don't have to wait until the money is accrued before you can use it. Isn't that great? You can access the entire $1,200 immediately, all with a swipe of your Access Plus card. The IRS stipulates that all of the money must be spent during the plan year. This is often referred to as the use it or lose it rule. But don't let that scare you. It is very rare that employees lose money in a flexible spending account because they know they need to use it. So most underestimate their account elections. At USBAFlex, we make it easy so you don't worry about it if you forget to turn in your claims, because it is so easy to get money from our Access Plus debit card. Plus, you save 25 to 40% in taxes depending on your monthly income, with lots of extra money added to your take-home pay. Flexible spending arrangements are regulated by the IRS. Here are a few things to remember that the IRS requires. Once an election has been made at open enrollment, it cannot be changed mid-year except in the case of a qualifying event. All expenses to be reimbursed must occur during the time that you are covered and active under the plan. FSA money cannot be rolled over from year to year. Any money remaining in the employee's account at the end of a plan year will be forfeited to your employer. Medical and dependent care accounts act separately. Monies cannot be interchanged. You have access to the full annual election amount as soon as the plan year begins. You cannot claim any expense that will be covered by any other health plan. The IRS requires documentation for reimbursements. Using the debit card, 80 to 85% of reimbursements are automatically satisfied. Money must be in the account before reimbursements can be made. It is not pre-funded. Maximum election per family is $5,000 per plan year, or $2,500 if married filing separately. Employee's spouse must work or be a full-time student to be eligible for participation. It cannot be used to pay employee's child for babysitting expenses unless that child is over 19 and is no longer claimed as a dependent to the employee. USBAFlex employees have been trained to ensure that your account is always up to date with current IRS code. Employees can then determine and estimate their annual expenses while staying within the employer's annual limit, which you will find in your summary plan description. To review, a flexible spending account or arrangement, FSA, is an IRS program which allows participants to pay for qualified medical and dependent care expenses with pre-tax dollars. This reduces your taxable income, which will then increase your take-home pay. Most of us spend hundreds of dollars each year on various medical expenses and prescriptions, or over-the-counter medications. A wide variety of these medications are eligible. Here are examples of what is covered: office visit copays, chiropractic visits, vaccinations, contacts and glasses, eye exams, prescriptions, dental treatments, non-cosmetic, surgery, radiology, emergency room, hearing aids, laboratory fees, anesthesia, physical therapy, orthodontia, dermatology, non-cosmetic, psychiatric care, and LASIK eye surgery. A general rule for OTC items: they must be obviously for the treatment of a medical condition. Vitamins and supplements do not qualify. A 1-year supply for any one item is allowed. The IRS requires a physician's prescription for over-the-counter drugs or medicine. Over-the-counter medicines must be accompanied by a prescription and a paper claim form for reimbursement. To be sure your over-the-counter items are eligible, you should contact USBAFlex. Now you're ready to start your flexible spending account from USBAFlex. So sign up today for your Access Plus debit card and start saving money right away. USBAFlex will guide you through.